we're going to be talking about whether fintechs are winning Canada's business banking race, a very cheeky panel title. And I'm thrilled to be joined by two founder CEOs representing companies that are definitely very far along in that race. So Rob Khazzam, the CEO and co-founder of Float, Oliver Takach, the co-founder and CEO of Keep. Thanks for joining us.
Thanks for having us.
Thanks for having us.
So just maybe let's start with like your businesses. Like what's the story? What do Keep and Float do? And maybe like quickly how like just the origin of both of those companies.
Sure. Yeah. So that's a little loud. For background, in 2021, my co-founders and I got together, and what we saw in the finance industry as it relates to Canadian companies is friction, a tremendous amount of friction for Canadian companies trying to do fairly basic things: borrow money, close their books, access capital, process payments. And what we found was businesses are having a hard time spending the money they already have in their bank account, and they are not spending time or able to spend as much time on the things that create economic prosperity, new products, R&D, geographic expansion. And we saw an opportunity to break down the barriers that exist between financial services, payments, and software, which results in this whole patchwork of 17 different tools that finance teams and companies are using to build a much better future. And that future is an end-to-end financial platform where companies can access capital, do business banking, manage payments, and achieve real financial automation. And that's what Float has been up to. We're about 4 years old now. We serve 4,000 customers across Canada with a suite of products that include corporate cards, a very, very robust financial management platform, in addition to products like FX, credit, and bill pay.
Awesome. So we started off Keep because I'm a two-time YC founder, Y Combinator, down in the United States, as well as I bootstrapped a company and sold a company successfully. And one of the biggest problems I had when I started my ventures was sitting in Vancouver. We had lots of customers. We were trying to grow. We were all using my personal credit card. We went into the bank. I'm just like, hey, we've got revenue. We've got money coming in. We have clients. Can I please get a corporate card so I don't have to have 5 versions of my credit cards floating around the office to pay for things? They're like, sure, rejected. Okay, thanks. We had a lot of US customers, and so US customers, as you all know, they don't understand what a SWIFT is. They're like, hey, doesn't the world run on ACH? It's like, no, that is the American way of payment rails. And so it was really difficult to explain to them how to input SWIFT codes into their bank account to pay me. And then finally, which really was grinding my gears, was that the bookkeeper and the accounting firm that we were hiring, they would every single week send me a to-do list of tasks that I had to do in my own bank account to unblock them. And I was like, wait, aren't you supposed to help me with administrative activities rather than the other way around? And so this led to this idea. I was like, hey, what if we didn't have to do those 3 things? I just want to have a business credit card, have multiple people with, of course, the right settings and security settings and controls, move money and do their jobs that they need to, and then finally, global money movement. And so that was the origination of Keep. And so I reached out to about 200 customers and I asked them, hey, is this a pain point that you're facing? And all of them said yes. I've never done a user interview where so many customers or so many individuals had the exact same, they used the same words to describe certain financial institutions, and we have to do something about it. So kind of like, to wrap it up, I went to my smartest friends. I asked them, hey, do you think this is a good idea? I just needed some validation, a little pat on the back. Like, okay, go for it. And they all said the same thing. Oliver, incredible idea. You are absolutely the wrong person to do this. And I was like, thanks, guys. I appreciate it. I'm glad that you're my friends. And so 9 months later after that, we became one of the first business credit cards in the market in Canada. And now we solve all those problems. We have a business credit card for small businesses, regardless of their creditworthiness that's assumed or given by the banks. We have multi-currency accounts with 36 different currencies and global or local money movement services. And you don't have to be the admin of your bookkeeper anymore.
And can you give us a sense of scale of both of these businesses? Like what stage are you at? Like how big are Keep and Float in Canada?
Not going to tell you. We serve 4,000 customers across Canada, and we process a couple $2 billion a year in payment volume.
So we also have 4,000 customers in Canada, and
We've got 5,000. No, just kidding.
we still have 4,000 because I'm an honorable man. Just kidding. Because we are we're multi-product, and so TPV isn't the only way to measure it. So it's a little bit difficult to talk about size, but because we do have the corporate credit cards, we have money movement. Folks store funds with them. They earn through us, and then also they spend money. So.
Okay. Well, thank you very much for your honesty. So. I mean, I would put both of you guys in the bucket of some of the fastest growing fintech businesses in the country right now. And both of you are going after fairly similar customers, at SMBs at various scales. What do you think that says about the state of Canadian small business banking, that two of the fastest growing companies can be going after the same clients?
I mean, I think the reality is it's extremely early. If you were to take both of our customer bases combined, our business volume, and any upstarts in Canada, the penetration level of the total market is still relatively early. It's incredibly early. Like I would consider this the first inning of a 9-inning ball game. I'm a hockey fan, but it works better with baseball. And what it tells me is that there's a tremendous amount of opportunity. And there's a tremendous amount of dissatisfaction. I think that the range of problems that customers are facing is only increasing. It's actually only gotten worse. You have a lot of the same challenges that existed in 2020 or 2021. Now you have a much more difficult macroeconomic situation for a lot of Canadian companies that we all know. And I think that the reality of what's happened in AI and technology over the last 2 years just further convinces us that the future is not going to be through the traditional model of serving companies through banks, credit unions, and then some external third-party software layer. This is already, to me, like abundantly clear, and it will take time to fully come to fruition in the Canadian market. But it is happening, and I think if you look at what's happened to the Canadian economy over the last year, what I'm hopeful about is that the things that you and I are talking about, everyone is talking about and increasingly saying this is unacceptable. This is a OECD country. How is it possible that it takes 10 business days to send $10,000 to someone? This is ridiculous. You can't build a winning economy and create economic abundance and prosperity if this is what companies in Canada are spending time doing, when companies in Australia and the US and the UK and France and Brazil are not doing this. They're innovating, they're building products. And so as a Canadian, I'm hopeful. It's something that Canada's long needed.
So what do you say to people then that look at the Canadian SMB market and say it's kind of small? Maybe it's like a winner take all type thing. How big is are those?
It's 98% of the companies in Canada are SMBs. So there's only a handful of really large companies in Canada, and unfortunately, and I hope I'm not offending anyone, if you look back over 25 years, 50 years, 75 years, 100 years, Canada's not producing any more of them. So outside of Shopify, there are no mega corporate companies right now that I can see in Canada that are being developed. The future is small and medium-sized businesses, and it drives 90% of the Canadian economy. And so this is the Canadian market, whether service providers here embrace that or not. And as a citizen, as a voter, I want those companies to succeed. Whether they work with Float or Keep, like does it matter? We'll all be better off if the GDP of this country goes up. And if you look at GDP per capita and labor productivity over the last 10 years, it's no accident that it's not going anywhere. And I'd like to think that companies like Float and Keep have an opportunity to play some small role in driving that productivity up in our own way.
I think the answer is also like, depends on how you look at it. So the question is, how many are there? Well, there's 1.2 million employer businesses, meaning they have one employee that they're employing, and then there's 2.5 million self-employed businesses in Canada. That's actually a lot. And then also, typically, if you think of like the way you would draw the lines, which is like, you know, the question that you asked is even telling, which is, how is small business banking? That's not how a small business owner or anyone that's an operator thinks. They think about, how do I make sure that I am delighting my customers, providing service, providing value, make sure that we can feed my family and the family of my employees. And in order to do that, it becomes incredibly like vast of all the operational work that you have to do that. It comes down to you have to earn money, you have to store that money, you have to spend that money. Typically, you have financial institutions that do a bulk of that, but they don't do the other pieces very well. And for so long, which is kind of what Rob mentioned, is that you have this like bifurcation of, okay, your job is to help me earn, your job is to store. Whereas now it's starting to come together where if you think of a financial operating system, it has both sides, and all of a sudden it becomes 10 times larger of how much value you can drive for the small business, and therefore capture hopefully a small fraction of that back. And that TAM is enormous and one of the largest TAMs in the world, frankly.
So I think that's a nice segue. So I want to talk a little bit about product strategy. So business banking is pretty complicated. You know, it's it's payments, it's invoicing, it's tax, it's payroll, it's a ton of different stuff. Why did both of you guys decide to start with cards as like the foundation?
Right. So there's basically great examples in 3 areas to start: earn, store, or spend. In order to start with, so there's like pros and cons to starting for each. The pros for starting in earn is that you become the way that business earns, so you are at the start of a relationship, an external relationship with that money, with their funds, and that's really, really powerful. This is Stripe, this is Shopify, Square, etc. If you start with store, this is the most similar is the neobanks. The U.S. doesn't. The U.S. has some examples. Europe and Asia has a lot of examples. This would be Mercury in the U.S. You've Conto in France now, in Western Europe, and some other examples. That's what storing starts like or looks like. And then you have spend. And the reason why we started with spend is because with spend, it's the easiest way to get a switch happening for a customer and to provide immediate value. So we can go out with essentially just marketing. Today, we still have no sales team at Keep, which is also very, very unusual, is that we can market a product and basically get a relationship with someone that would typically take an enterprise sales team. And that's really, really powerful. And that's why we've been so efficient and been able so aggressive with our growth. And by having spend first, it also allows us to keep building and going deeper and deeper in the financial operating workflows of a business. Because as soon as you pull out your card to spend on something, what happens? You have a receipt. Now you have to do expense management. So you get a text, you take a picture of a receipt. It automatically tags that receipt, and then it uploads to your bookkeeping or accounting software. Well, how do you know what to do in that bookkeeping or accounting software? We understand, we've integrated with that accounting software. But that's a Trojan horse for us to get more and more information about that business. So what started off as a spend and loyalty maybe, or helping with some administrative tasks, now we have incredibly rich data of the entire cash flow of a business, and now we can make smarter underwriting decisions, we can cross-sell different products, and this is how you get to over 250% net dollar retention, and the aggressive growth that we've had. And so for us, it has been a very, very strategic choice from day one. And we've been very successful at cross-selling now the store components, and then very soon we're launching the earn components.
So then where do you go from there? I mean, so like, you're adding in new products, cross-sell, you're saying is a big thing. Like at what point do the offerings that both of your companies have, I guess, rival the product catalog that a corner bank would have? When can I, completely jettison, myself from let's call it the incumbent banking system, and then just move to the fintech system?
I don't think it's binary. I mean, I know everyone wants this like aha moment, and even for customers, I don't think it works that way. Businesses, especially larger businesses, have very diversified relationships with banks. You can't. It might be easy to talk about the day-to-day checking account, but if you have mortgages and term loans and equipment financing and all sorts of different things, I think that will take a longer period of time. But we're already seeing it happen. We've already seen many of our customers migrate over much more of their financial relationships to Float, not even necessarily at the time of choosing Float, but over the span of a year or two as they start to see new offerings that we have. And I think more importantly, the more successful we are at ensuring the technology that we integrate with is the technology that they use to run their business. And so I think that that's a spectrum. It's already happening. And I think, as is always the case with technology, you'll have a segment of early adopters, young companies that maybe have more of an impetus to try new things. There's a large segment of the Canadian market that's very risk averse and may not be aware of these things. And I think in all industries you see that. You see early adopters start, other parts of the industry say this is crazy, and then 3 years later they say, well, actually now this makes a lot of sense. When Float started, we served only startups. 99% of the companies that used Float were startups. 85% of our customers today are not startups. They're actually businesses you've probably heard of. They're manufacturing companies, they're professional services businesses. They're not just people wearing t-shirts on a stage like this. And that's important to us. We want to serve the whole of the Canadian economy. And so I do think that transition is already happening, and it, if anything, will be accelerated by what's happening in the software space right now with automation and AI, which is, to me, the most exciting accelerant to this entire industry, even though it doesn't necessarily have anything to do with business banking in and of itself.
So since we're already talking about banks, like where do you guys see yourselves today? Like, are banks like an enabler? Are they a partner? Are you thinking in terms of competition? What's the relationship you guys have today? And maybe also like push that out a little bit. What's the relationship you think that you'll have in the next decade?
So for us, they're actually all of those things. It depends on which product, and then in terms of what part of the journey our customers are on. Our number one competitor is a personal credit card, still to this day. And that's what we're trying to kill. We're not trying to kill other business credit cards because our customers don't get them. They get rejected for them. And so what folks are doing is they're essentially getting 7 credit cards from if you become a VP of finance for one of our customers, your job on day one is to open a couple of credit cards in your personal name that you take personal liability and use it for company workflows and payments. Like that's insanity, I think. And so for us, that's like, first of all, like who we're competing against. So maybe like the answer is actually the number one competitor to business banking or fintechs is a consumer credit card. Didn't see that in the bingo cards, did you? And for us, we've had incredible partners that are also forward-looking. We've partnered, are issuing our products through People's. They've been a great partner for us, and being able to take a bet on us as a young company and to go live as their first credit card product. And then also finding other partners, again, financial institutions that understand the need for the segment, that they understand that they cannot serve the segment well, but want to, and join us in that mission. And so I think it's actually not as aggressively we're competing as one might imagine. We're trying to do right by business owners and businesses so that the economy can thrive.
Yeah, I would echo the same thing. We partner with several Canadian financial institutions, and we're proud to. They've helped to bring Float to life. You named one of them, and there are others as well. And so it is complex. I mean, some of them help power us, some of them bank us, some of them are underwriting certain products. One wants to buy us, three want to partner with us. It depends on the day of the week, to be honest. But I do think that you can't build a fintech in 2025 without partnering. It's just simply the reality. And I don't know how you feel, but we also don't want to build every aspect of the business from the ground up. We work a lot already, and there's not enough time in the day to do all of that. So our focus is on working backwards from an amazing customer experience, not having that customer jump through the complexity of Canada's regulatory and infrastructure landscape. We'll take care of that on the back end and have you log into our product and run your business and not hear about any of that stuff is the thing that we want for our customers. And with the partners we work with, it's a commercial relationship. We're trying to find win-win-wins. Where's there an opportunity to help us unlock a product experience for Canadian companies that drives business volume and helps enable something for Float, and is also a business line that one of the banks is really interested in. And it's surprising, people always ask us, but we have a whole bunch of really interesting business development conversations happening with Canadian banks that are actually interested in helping power those products. And I think that's great. So that's how we're approaching it.
You don't want to share any of those?
Pardon?
You don't want to share any examples of those?
Well, I won't share the names, but it's very open. We have a discussion now with a couple different banks about powering different products, and they've actually said, we know who's powering this. We want to power it for you. Let us sharpen your pencil and let us see how we could work on this roadmap with you. And we're always open-minded to that.
So I want to hear a little bit more about you. I mean, you both have said partner, like several times in both of those answers. And also, like I know previous to these businesses, Rob, you worked for like very big organizations that have done work abroad. You've done YC multiple times, so a lot of exposure to the U.S. What is unique about building financial products in Canada? So what makes Canada special or difficult or weird?
So the way I think about startups is that every startup, if they were to be a circus act, what circus act are they? Some startups are, I ride the tallest unicycle, or I can hold my breath for 10 minutes under the water. And so what is the circus act that you must be when you are a Canadian fintech founder? Here it is. The circus act, and I think Rob will agree with me, is we are able to balance 100 different plates on 100 different little poles simultaneously at the same time. And then people try to wrestle with you as you're trying to go. And like as soon as it's about to fall, that plate, you like spin it, and then you go and you spin it again. And you're running around trying to spin these plates, and you have 100 of them spinning at the same time. And that is the circus act that you have to do. And nowhere in the world, and I've talked to founders, I think at 13 different countries now that are unicorn founders, no one describes their circus act as that. And I think that is one of the challenges, is that you have to rebuild so much infrastructure, so much plumbing and connective tissue to be able to offer any single product. And now if you want to go multi-product, hence the circus act.
I've never heard that analogy, but I like it. I'm gonna use that.
It's yours.
Now I'm trying to think about how to beat that, but no, I can't. I mean, it's a tremendous amount of complexity. I think what's funny is if you look at our company's products, and sometimes people will say like, "Oh, well, I could spin that up." I don't get it. I could code that, and that's actually the easy part. It's how are you going to do the money movements? How are you going to deal with the licensing programs that you have across Canada, and if you're moving money in the US, how are you going to deal with 14 different regulatory regimes, and then layers of infrastructure players, issuing banks, card networks who all have their own interpretation of those policies. And I think what's different, Canada has an oligopolistic banking structure. We don't have any open banking. The banking system is archaic. Even float to when we raised our Series B, we got $50 million US, and the lawyers were like, "Did you type in the number right?" And I was like, "Are you kidding me? It's $50 million. Like, do you have this right?" And they're like, "I don't know. We'll find out in 3 days when it lands." You're contending with those things, but it is true. You're playing an enormous role coordinating and orchestrating. And I think the culture that is difficult in Canada is excessive risk aversion. And the way I frame it is always rounding up. So I'll give you an example. If you work with a series of infrastructure partners and we say, great, we want to sign up this company to use Float or use Keep, each of those players will go, you know what, let's ask for 5 more documents. We don't actually need this information, but let's make sure we get it. Or let's make sure that this form is not signed digitally. It's got to be faxed. It's got to be dropped off at our office. This isn't a joke.
Or notarized.
Yeah, or notarized. And
I'm best friends with my notary.
Everyone is well-intentioned, but what gets lost is when you add up the cumulative friction, this is how you end up with absolutely abysmal customer outcomes and experiences, because everyone along the way is going, and this happens at Float, the compliance team will say, we'll add this in. I go, do you know that it takes 17 days to get through these steps? No business is going to do this. And so we always abide by the law. We take the regulatory stuff seriously. You have to. We're in the business of trust. But we try to bring the lens of operational efficiency. So we actually have a lot of people who are really nerdy at Float who go, you know what's the coolest thing ever? Figuring out how to get this document signed by 1,000 people as quickly as possible with as little delay as possible. And we have this old form that we got to process and get filled out, but that team's really good at how do we get people to sign it when they open the email and then click it right away. That's the little battle that you're fighting, because everywhere those things add up and lead to friction that result in businesses giving up or just taking too long to get what they need. And I think with interest rates and inflation where they are now, it matters a lot. So as a powerful example, in Canada right now, if you want to pay someone, finance teams are budgeting somewhere around 10 calendar days for it to get there. So they're going to move money from one bank account to another. Then they're going to schedule a payment, and there's some due date. But they're going to start sending the money before it's due. And if you actually look at the average payment cycle that businesses are running, there's 10 business days of dead capital. That capital's not earning interest. It hasn't landed at a vendor yet to offset a payable. And they're not able to do anything with it, so they've got a cash conversion crunch. And if you think about a month, or you have 20 business days in the month, and the cost of capital is 5% annually, it's a pretty big deal to have capital sitting dead in effect for your company for 10 business days at a time. You'd never know that if you're just sitting at the forms and going, well, we need all this filled out. But if you come up to 50,000 feet, you go, businesses are spending most of their time just shuffling money around. And the higher that interest rates are and the higher that inflation is, the higher the opportunity cost for that capital to be in flight, essentially, and not earning interest and not doing anything for you. And that's why I'm incredibly excited about the potential for what this technology can enable.
Our North Star metric for applications is what I like to call the potty application, which is, can someone be on the potty and submit and get underwritten and get a credit limit at Keep before they have to, flush?
We do the same thing, and it's this is a common refrain about banking, and we've got nothing against the banks, but what I would challenge everyone in the room who's building a company is customer service standards need to be way higher. And I cringe when I call someone and they say swing by a branch. I'm like, in what world am I coming by your branch to do this? Everyone's busy. No one works, hopefully, in Canada anymore between 9 to 5. You're not going to drive economic innovation and prosperity in a competitive industry working 4.5 business days a week. So you're busy. Your business, most business owners, probably the earliest stage businesses, they're working 7 days a week. They got stuff going on at 9 p.m. on a Friday. They don't have time to wait for a non-bank holiday business day. And that's why we try to operate with unreasonable standards internally. 24 hours a day, 7 days a week. We get a query from a customer. our team has 1 minute to respond. And if we don't respond in 1 minute, SLA, 24 hours a day, 7 days a week, 365, we failed that customer because we may want to go home, they don't get to go home. And I think that that's a mindset that every Canadian company can take, which is there are no work hours. Those days are gone. In 10 years, no business in Canada, in my view, is going to accept answers like that. They just don't care. We don't care. When money doesn't land for our customers, we're online. If we have an outage and payments aren't going through, and they do happen, 24 hours a day, 7 days a week, 365 days a year, we have on-call engineers, pager duty, and I will be up, and the entire technical team will be up. It doesn't matter if it's Christmas Eve, 3 in the morning, because we have a duty to serve our customers. We can't say, we'll talk to you on Tuesday. And I think that that's easy to say, hard to do, but that's the attitude that we need in Canada because commerce is not being run in the way that it was in the 90s anymore. And international companies that our companies are competing with, why is this so important? Because the companies Canadian companies compete with, that's how they think. They're not interested in bank days. They're interested in what does this company need? What can we do to help them? And people are increasingly global and online. And so these restrictions, they just don't apply anymore.
Well, I really, really appreciate both of you guys getting up here and being incredibly transparent and very passionate. It's an honor to have both you guys here, and I hope you join us again. Thank you so much.
Thanks for having us.
Thanks for having us.